I'm starting the webinar now.
Okay. Yeah. Good morning, everybody. Good morning, everybody. Welcome to Digital Service Tax. My name is Wangeshika Nyeki. I will be your host for the day. I'm a media practitioner at the Sandbox, and I will be your moderator. So welcome to the Digital Service Tax. We are so honored to have all of you here. And this event is hosted by True Quantum. They are a consultancy company offering accounting and tax compliance planning and advisory solutions. We all know that we need some help once in a while in our finances and our taxes, and True Quantum are here to serve you and to meet your needs and provide advisory solutions that are compliant. Again, as I have said today, our topic is digital service tax. This is a tax that was introduced in January 2020, and today we will be hearing about it. And who does it affect? Does it affect the influencers or those with e-commerce platforms, online courses, like everybody seems to have a master class these days? And those are now affected by the digital service tax. And today we will be hearing about that. True Quantum has been carrying out a tax clinic series, and last month they talked about the minimum tax. If you missed that content, please look out on their social media pages and you'll be able to get the advice that is needed so that you are compliant on the minimum tax. But today we are focusing on the digital service tax. As you may be aware, we have we are right bang in the middle of a pandemic. And last year, when there was lockdown in most countries, Kenya included, a lot of businesses went online to stay visible and to practice or at least have some e-commerce of one form or the other. So welcome again. If you're on Facebook, and what a poll, if somebody can share the poll of the day, please. To start us off, all right. And the question is, who needs to pay the digital service tax? Who to pay the digital service tax? Is it everyone buying and selling online? Is it everyone who's selling goods online, goods or services? Is it everyone selling services only, or all of the above? Okay, so let's fill that, the ones who are in the webinar, if you can do that. Who needs to pay the digital service tax? Is it everyone buying and selling, or everyone selling goods and services online, selling only, everyone selling services only, or all of the above? All right, so at the bottom of your screen, you will see that you have a chat option. Please tell us where you're logging in from, your organization. And we also have Q&A section at the bottom. If you need to ask a question during this workshop, please use the Q&A so that we don't miss out on your question. But you can use the chat option to communicate with us. Thank you very much. I see Dan Sonko. He's from Creatives Nest Foundation in Mombasa. Karibu sana, Daniel. We're so honored to have you. Thank you for joining us. Could we have other people tell us where they are logging in from, their organization, and what you do online? So the digital tax will affect anybody who's trading online, including e-commerce platforms, including online courses, influencers, and we all seem to be heading towards the online platform. So it's going to affect a lot of us, and you need to be aware what it is about. So we have a poll there. Everyone selling goods and services online is at 55%. Everyone selling services only is at 36%. All the above are 9%. So Eric, you'll be telling us which is the correct that. I hope I'm not affected. Thank you, Doreen. I see Doreen. She's the Senior Community and Marketing Manager at Women Work Network. I'd love to hear about that, but happy to be here. Thank you, Doreen. Thank you so much for logging in. We are so honored to have you. So there you have it. From the panelists and the participants, most of them think that the tax is for everyone selling goods and services online. I wonder about buying, but that's the highest poll result, that everyone's goods and services online. And we'll be hearing from founder of True Quantum whether that is true or not. So welcome again. As I have said, today we are talking about digital services tax. This is a tax clinic, and we will be getting advice on the digital services tax that came into effect in January 2020. My name is Wangeshi Kanyeki. I will be your moderator for the day. I am a media practitioner based at the Sandbox, and we are so honored to have each one of you here. The True Quantum has been carrying out tax clinic series, and today we are discussing digital services tax. Does it affect you? How does it affect you? Are you exempt from the digital services tax? And we'll be hearing that in a bit. So thank you very much. We want to close the poll. A little bit about Eric Knotty, and Managing Director of True Quantum. He has over 16 years of accounting, finance, and tax advisory in different sectors such as NGOs, automotive industry. He has worked for PwC. He's also a member of ISPAC, that's the Institute of Certified Public Accountants of Kenya, which is a professional body for accountants. So welcome, Eric. Please tell us about True Quantum. Tell us who they are, what they do, and why they do it. And on the side chart, I see David Kanyi, Head of Market, Deepening at Capital Markets Authority. Excited to learn more about the digital tax. Karibu sana, David Kanyi. And over to you, Eric. Welcome. Please tell us about your organization, what you do, why you do it, and then tell us about the digital tax.
Okay, thank you, Wangeshi, for that lovely introduction. And basically to welcome everyone who's taken time to join us for this session as we try to demystify what digital service tax is all about. I've seen the poll, and I can say some of us have an idea, others we are not very lost, which is a good place to start. However, maybe a disclaimer, we don't say that we are gurus in everything. So today it's more of a discussion to understand areas that are not clear, as also demystify my understanding or interpretation of the digital service tax. So before we start, I'll just take just a minute to talk about True Quantum. So we are a consulting company which was founded in 2016, 2015, but started operations in early 2016. So we offer accounting, tax, and advisory services. And accounting, where we handle from the basic stuff where we help companies in their bookkeeping services, or they outsource all their finance function. So our focus has been mostly around micro, small, and medium enterprises. However, we also have clients who are large organizations, some multinationals, but our main focus is around micro, small, and medium enterprises, where we look at how we can work together and grow their businesses. As they grow, we also grow together. So in terms of today's session, which is more of a tax session, I'll just quickly run through some of the tax services that we provide. That's tax compliance, from the basics where we help you file your returns, either annual returns. I know there are, for most individuals and companies, deadline is fast approaching towards the end of June, but if you have any taxes to pay, which are payable by 30th of this month, then we help you file your VAT, pay as you earn, and SSF and HIF. And if you have monthly rental income, we also assist in that. Capital gains tax, if you sold property or shares and you'd like to know what taxes you owe the exchequer, then we are the people. Then also helping you to be compliant if it's turnover tax, what you are registered for, or digital service tax, and also minimum tax compliance. And then the other things around tax planning, where we come to review and plan your transactions or your business operations to ensure that you are tax efficient. Then there's also aspect of tax health checks. I know currently there is a legislation that was passed where we have what we call voluntary tax disclosure, where companies are allowed to basically compute your tax in terms of tax risks or tax non-compliance for the past 5 years, and then request for a waiver, 100% waiver of penalties and interest under the voluntary tax disclosure program. Then also assist with VAT refund applications and follow-up, then dispute resolutions. I know people are getting a lot of letters from the KRA, demand letters. Then we walk the journey with you up to either the alternative dispute resolution, what we call the ADR, or the tax appeal tribunal, where it's an issue of maybe tax interpretation, where the authority has interpreted the tax legislation differently, or where the facts are not as they purport to represent. And then also application for tax exemptions. And then we also provide tax training. This could either be general like this one, or we do targeted where we come into organizations and assist you. I think in a nutshell, that's more about us. And if you need more information, you can always check our various social media platforms for more info. So without taking much time, we'll delve to the topic of the day, which is digital service tax. I know we tend to call it digital services tax, but it's more around digital service tax. So what is digital service tax? So today's discussion will revolve around the following key points. I know it will be a bit heavy in terms of technical, but we try to make it as simple and understandable as we can. So we look at the legislation, because before a tax is implemented, there has to be key enabling legislation. Then we look at key definitions that we need to have in mind so that we're able to understand what digital services for which DST or digital service tax applies. So I'll be using DST interchangeably to discuss digital service tax. Then we have exemptions, what services are exempt from DST, then application of DST. How do you apply so that how does this come about in terms of what is the application so that you are required to pay the DST? Then registration with the Revenue Authority, that will be another area we'll be looking at. Then we have a case study where we look at just two examples, simple examples just to illustrate what we have learned today. Then treatment of DST paid. Here we look at if you pay digital services tax, what does that mean at the end of the year? And if you've overpaid, what does that mean? How do you get that money back? Then we'll also look at VAT and other key considerations, some of the things that we need to consider. So I know we have a session for Q&A, but feel free to post your questions as we proceed. So in terms of relevant legislation, so DST, it was introduced in Kenya through the Finance Act 2019. However, it became enacted through the Finance Act of 2020 with an effective date of 1st January 2021, which is this year. However, for it to be operationalized, there are some regulations that had to be put in place. So we have the income tax, digital service tax regulations 2020, which basically brings out the various definitions and how the DST will be treated in terms of income tax as a tax, since it's an income tax. And then regulations around the VAT, value-added tax, where we look at the digital markets. Regulations outline, so basically the guidelines of the operations of DST. So what is DST? So digital services tax will apply to all incomes. And we've highlighted this section for emphasis. So if I'll request one of the key things at the end of this training, just ensure you remember this. So DST applies on all income earned or accrued in Kenya through a digital market by both residents and non-residents. So it looks at leveling the playing ground for both resident and non-residents who are digital service providers or digital marketplace providers. So here there's a person providing a service, a digital service, and there's a person providing a platform where you come in and sell your digital services, or place your digital services. So creating a situation where there is a buyer and a seller. Then it is applied at a rate of 1.5% of the gross transactional value. So once we've understood that, the next point will be just be looking at then what is this thing we are calling digital service or digital service provider. So there are key definitions outlined in the various regulations, and we'll start with the income tax regulation, which looks at, the various definitions. So from an income tax perspective, we first need to understand, because based on our definition, we say DST applies on all income earned or accrued in Kenya through a digital market by both resident and non-residents who are digital service providers or digital marketplace providers. So a digital marketplace will mean basically a platform that enables the direct interactions between buyer and seller. So the marketplace will either be a service through electronic means, so services. So this will be through either by an app or through the web or through a mobile phone where maybe accessing an app. Then we have a digital market provider. This will be the person who provides a digital marketplace platform. So if I may pick an example just to illustrate for us, a digital market provider would be like YouTube, which provides their platform, the YouTube platform. And then the digital market will be now the YouTube, where if I'm a content provider, I'll post my content there. And then maybe person X comes and accesses my content for a fee. So the digital service means any service that is delivered or provided over a digital marketplace. And we are going to look at the various services that are listed in our tax legislation that basically show what digital services are. So platform. So once we looked, a platform will mean any electronic application that allows a digital service provider to connect it to users of the services, either directly or indirectly. And this we've said could include a website or a mobile application. Then you remember we talked about DST being applied at 1.5% of the gross transaction value. So gross transaction value has been defined as either payment received for consideration, received or consideration for the digital service. And it could include commission or fees paid to the digital market provider for the use of the platform. So here we have two people that we need to keep in mind. The person providing the digital service for a fee and the person providing the platform. So whatever they are paid is what now comes in as a gross transactional value. And this will be the value that will be paid for despite any deductions. I know we have a discussion around YouTube where some of the content providers have received communication that going forward, they'll be deducting some fees, a percentage, and remitting the same to the US taxes. So to give an example, if I provide services worth 1,000 bob and YouTube deducts maybe 16% and remits in the US, for the Kenyan tax purposes, I'd have to account DST at 1.5 of the 1,000. But I'll explain as we proceed how we'll deal with the taxes that have been deducted from a US perspective. So based on the two regulations, one around the income tax, which we've covered some of the definitions, we also have to look at some of the value-added tax, digital market supply regulations, which now bring some of the definition. For instance, we have business to business, which we usually refer to as B2B transactions. This will be transactions between a supplier from an export country to a tax registered or non-registered business entity in Kenya. So again, here we are looking at DST from a point of not just a local person registered for tax purposes, the person who has a PIN, but also looking at the non-resident business or non-registered business entity in Kenya. Then we have business to customer, which we call B2C, which means a transaction between a supplier from an export country and a customer in Kenya. And we look at what an export country means. So an export country is any country other than Kenya and includes any place which is not situated in Kenya. So when we say about any place not situated in Kenya, and we look at this as we proceed on when a DST is considered to have been, a service is considered for DST, and has been provided in Kenya, we look at situations where we would say any place which is not situated in Kenya. This could be either by looking at the IP or even the card that has been used, a credit card or debit card. Is it from a Kenyan financial institution or is it from a body that is outside Kenya? Then digital market supply, because this is where now what VAT is based on, is a supply of a service on a digital marketplace. Then intermediary would be any person who facilitates the supply of a service through the digital marketplace and is responsible for issuing invoices or collecting payments for the supply. So again, here we'll also look at how does that have an implication in terms of value-added tax. So we've looked at this, we'll be able to look at what services, what digital services does DST apply. And this is basically, we've just captured what is provided in our tax legislation. So the various regulations which now present downloadable digital content, which will include downloadable mobile application, ebooks and films. This is where you download for a fee. Then over the top services, this will include streaming, television shows, films, music, podcasts, and any form of digital content. And what we need to remember is where DST will apply where there's a fee paid for this. Then there's also sale, licensing, or any other form of monetizing data collected. So again, here we are targeting at AI, artificial intelligence, where people collect information and this information is sold maybe through the digital marketplace. Then provision of a digital marketplace. This is where we talked about people who provide the platforms. So once they earn an income on that, then that will be subjected to GST. the fee that they charge. Then subscription-based media, including news, magazines, and journals. In the recent past, we've seen some of our media houses moving away from just selling hard copy print papers and moving to the digital newspapers or magazine and journals. So the fee that you paid will be subjected to DST. Then electronic data management, which now includes people who provide web hosting services, online data warehousing, either through cloud or cloud storages and file sharing services. And then we have electronic book or electronic ticketing services, including the online sale of tickets. Then provision of such desk services. So where supply of customized search engine services. Then online distance learning, either through pre-recorded media or e-learning. So this is where we've seen you can do a degree in Kenya at the comfort of your desk. So here you'll be paying for the online course, and then they send you the content or link and any other services provided through a digital market. So I know when you look at these services, they've kind of, this is where I would like to just say that this is something that is not happening in isolation in Kenya, but in many countries around the world. And we also have an organization we call OECD that has been spearheading the regulations on how countries can also get a share of the revenue from the companies providing these services around the world. So what services are exempt from DST? So online services which will facilitate payment, lending, and trading of financial instruments. Let's say like people in the finance sector or financial markets will realize, like for instance, if I want to buy a treasury bonds government issued and I have an account with the central bank, I can be able to place my bidding via my phone and later on then be able to buy either using my bank account online or my phone. Or even, I know we had what we were calling Mkiba, where you can even use your M-Pesa to purchase the treasury bills. So for such services, in our Income Tax Act are exempt, both in income tax and VAT, where their services would be exempt from either VAT or from income tax. So in terms of DST, the same would be exempt. Then online services provided by government institutions. So like eCitizen, if you are paying a fee or register of companies, then you'd not be expected to pay any taxes. So the other one would be income subject to withholding tax. And I think to give an example, if I'm an influencer and a company, for argument's sake, let's pick Bitco. Bitco hires me, Eric, as an influencer to advertise their new product, maybe their new soap that they've come up with. And I put it on my digital platform and people are able to purchase and they pay me for that service as an influencer. When they're making the payment, they'll definitely withhold the tax because that service at that point will be considered a professional service, and that one is covered under withholding tax. However, there are services, if it's by where I've posted content still as an influencer, you'll find that people like YouTube will pay me for my content based on how people access it. Then in that particular situation, then for that income I'll be required to account for DST. So I hope we can be able to distinguish that as we proceed. But if it's not clear, just feel free to post your question on the chat and we'll answer that as we proceed. So what's the application of DST? So DST applies to residents and non-residents, whether or not they have a permanent establishment in Kenya or not. When you talk about permanent establishment, this is where maybe someone has been in Kenya for a period of more than 6 months, and maybe they've established a structure and set up a business, and these are foreigners. So then they'll be considered based on that period to have a permanent establishment. That's now from a company as perspective, but from an individual perspective, you'd also look at the residency. For how long have you been in Kenya, as we determine your tax status in Kenya. So in terms of both resident and non-resident, you'll find under the non-resident, we have residents with a permanent establishment and residents without a permanent establishment. So all of them would be required to account for DST. DST will apply to their services, digital services. And this will be applicable provided the service is accessed in Kenya. And the payment is made either using a debit or credit card facility provided by a financial institution or company located in Kenya. The service is accessed using an IP address that is registered in Kenya or an international mobile phone country code assigned to Kenya. So if you access using your +254, then that one would be considered that DST will be applicable in Kenya. Then if the user has a billing resident or business address in Kenya. So if your billing is done through your PO box by Kenya Postal, or you've given your residency, and I'll pick an example. If I use Uber Eats and order food and I indicate my location as Nurse Apartment, where offices are, then the person, basically that service would be considered to be applicable for DST in Kenya. So how do we go about registering for DST? So residents or non-resident persons earning digital income are required to register for DST tax or night tax under their KRA PIN. Then for non-resident companies not having a permanent establishment, may opt either to register a tax representative where you appoint maybe a tax agent or maybe one of your companies or an affiliate or a legal person that you work with becomes your tax representative and takes on the obligations of a tax representative, which is basically to outline to make sure that your taxes are declared correctly and in due time and paid. The right taxes are paid to the revenue authority. However, we have a simplified tax registration framework where the non-resident can approach the commissioner for DST registration, and a simplified tax registration framework, which is through an online registration form that is prescribed. And the form ideally would require you to provide the following information: either the name and address and contacts of the applicant's business, the person, the non-resident, name of the contact person responsible for tax matters. So they would either appoint a local tax consultant or tax agent and indicate that person or any person that they have locally, or have a website or uniform resource locator of the applicant. Then the national tax identification number, which will be issued the country of residence. Then certificate, this could be the passport number, certificate of incorporation issued to the applicant's business. So if the business is registered as a branch here, then you get a certificate. And any other information the commissioner may require. So there's a form that is on the KRA website, which now provides you and provides what would be required. So once we've understood when DST becomes applicable, and this will apply to, for emphasis, all income earned or accrued in Kenya through a digital market, by both resident and non-residents who are digital service providers or digital marketplace providers. And we say that digital marketplace, it's a platform that enables a direct connection or indirect connection of buyers and sellers with digital services. So computation of DST will be at a rate of 1.5 of the consideration. And I think we talked about, we defined what a consideration would be. This would be either the fees paid or commission paid for the service. Then deadlines for filing is by 20th of the following month. So DST is more of what we call a transactional tax, like VAT or capital gains tax or withholding tax, where you'll be required to, if I issue my invoices or sell my products this month and I'm paid, I'll be required to file my returns by the 20th of May. That's the following month from the date of the supply or the sale. So we look at two easy examples that will help us basically just internalize what we've talked about. So DST is gross. So if I sold a service at 1,000 bob and also charged VAT, DST will be applicable on 1,000 bob VAT. The first case study, you can also read as I read. So we are Amelia, a resident, has a page on IG, Instagram, and FB, Facebook that assists people to advertise their goods and services for sale fee. In a commission that particular year, in the month of March 2021, she earned a commission of 1.5 million. IGF platform, digital services tax, revenue here would be 1.5. This would be so the DST would be 1.5 of the percent of the 1.5 million, which would result to a 22,500. So this would be payable, as we said, on the by the 20th of the following month. That would be in April, because the sale occurred, the commissions were paid in March, so the tax would be due in the following month. So I think that's a simple example. So we go to the next one. So at the financial year, so Amelia's financial year runs from January to December. So at the end of the year, maybe engaging an auditor or and we'll compute so that they can compute the taxes payable. So we've just taken a simple book of accounts. So total fees and commission earned in the year 2021 were 6 million. Business related expenses were 3 million. This could be advertising, this could be setup of the products. I think it's called showcasing of the product. And the DST was paid during that period. Since the total fees were 6 million, would be 1.5. So again, here you have to be very careful and truthful in what you declare, because at the end of the day, the first reconciliation would be what DST have you paid, so would expect you to match your DST, unless it's income that was not subject to the DST. Then Amelia has assets that help her in providing her services. These are, she has a MacBook, which she 50, an iPhone 12 Pro, 200,000 because of the 3 cameras and shots, and the HP printer, so that she can be able also to print some of our contracts and stuff. So when we move to the next slide, we'll look at typical profit and loss account. Fees and commission, she'll deduct the expenses of 3 million. I know the question would be, but she bought some assets. Those now would not be considered business related expenses, but as they'll be revenue, they'll be considered to be capital expense, but not revenue expense. So the business related expenses are the expenses that have been used or incurred in the generation of the fees and commission. So when we deduct that, she has a net income of 3 million, but we need to ascertain what tax would be paid. So we'd have to come up with a tax computation, which would start from the net income. Then we'd be adding back the depreciation. Because she's bought assets, we are considering that the assets have a depreciable value. So if you buy an asset today for 100 bob, in the next 1 year, the value would have gone down. Unless it's land maybe that would appreciate, or shares depending on the market performance. So we'll add back depreciation. However, our tax legislation grants you what we call wear and tear allowance. So as a way to encourage businesses to invest in their assets, we're able to grant wear and tear allowances. And currently the rate for MacBook, iPhone, and HP would be 25%. So would basically deduct that, and the taxable income for Amelia would be 2.9. And the tax at 30% would be 895, 125. However, some DST had already been paid in the course of the year. So she would reduce her tax by that DST and pay the tax of 805. And if there was any withholding that had been held on some of her income, then would ideally bring it down there and deduct together with the 90,000 and pay what is the difference, which is payable by the 4th month, which is by end of April. So how to treat DST paid? How do we treat the DST paid? For residents and non-resident, as in the case of Amelia, that becomes an advanced tax. So you offset the tax liability at the end of the year. For the non-resident persons without a permanent establishment in Kenya, these ones, then the tax would be considered to be final tax, and they will not be required to pay any other tax because they will be required to pay taxes in their respective countries. However, what happens in a situation whereby you've overpaid tax? So for the person whose their tax is final tax, if they've overpaid tax, then the credit shall be retained and offset against future DST. The assumption here is that they'll continue trading in Kenya, and thus they'll be allowed to offset any future DST. Then overpayment of a resident or an unresident with a permanent establishment, the amount can be refunded in accordance with what we call the Tax Procedures Act, which provides for ways of how you can apply for the refund, or maybe carry forward the credit to subsequent years where you can deduct that credit. So once we've gotten there, it's important also to look at some of the VAT considerations. So we've been told that VAT will become applicable if there's any digital market supply, and this is a supply of a service made on the digital marketplace, where we defined a digital marketplace is a platform that connects either directly or indirectly buyers and sellers. So the seller would be required to charge VAT on the buyer. So VAT is more cost that is incurred by the buyer, not the seller. But the seller is required to charge and remit to the revenue authority. So for you to be registered for VAT, it's fair just to reiterate on some of the key points. So you should be making vatable supplies. So in our case, the supply of a service made on the digital marketplace. And then if your expected turnover over a given year is expected to be 5 million and above, then you'll be required to register for VAT. Then how VAT works, we call it a wash-through tax, where we have the output tax. So for instance, if I'm the person providing services on the digital platform, then I'll be required to charge VAT, which will be my output VAT. And then if I've incurred any VAT when I'm in my costs, so that I'm in a position to provide that service, then I'll deduct that VAT. It could be VAT on the power that I'm using, or the person maybe who's helping me come up with my app has charged me VAT, then I'll offset. Then whatever, if it's a positive that means VAT is payable. If it's a credit, then it's claimable. Claimable meaning that in my next month's return or subsequent month return, I'll claim that credit to reduce the VAT that ideally I should have paid. So what are some of the VAT considerations for DST? So we look at supply. When is a supply considered to have been made? Let's say in the digital space. So we are recipient of the supplies in Kenya, or payment proxy, including credit cards or debit cards, information and bank details of the recipient of the supply is in Kenya. So if I'm providing a digital service, the person consuming the service, is he in Kenya? Do I look at the payment details if they are from a bank that is in Kenya? And then also the billing or home address. And I think I mentioned where if I ordered something from Uber Eats, then and the service was vatable, someone would be looking at where am I consuming the service from or receiving the service, and also the payment forms that I'm using, or if it's a mobile code in Kenya. So this would even be applicable where M-Pesa is used to pay for the service. So other VAT considerations, we also look at the term of supply, because this assists us in determining when is the VAT that when should I declaring that VAT. So date on which payment of this for the supply is received, either in whole or part. So if it's a cash transaction where I receive the service and pay for it immediately, then that would be the time when the supply was done. If it was today, then VAT would be payable by 20th of next month. Then the date on which the invoice or receipt for the supply is issued. So this is where there is no payment, but an invoice has been issued or a receipt. Then we have business to customer transactions. These are exempt from issuing an electronic, and I think we defined what a business to customer transaction is, which means a transaction between a supplier from an export country and a consumer in Kenya. And where we said an export country would be any country other than Kenya. Consuming some services from outside Kenya, then that company would not be required to issue an electronic invoice. Then deductions of input tax by supplier shall not be allowed for a supplier on a digital marketplace. These are only on transactions between business and consumer, which we call B2C. Then tax will be paid by a supplier or a tax representative. You remember we said that for DST, any person, whether resident or non-resident, either with a permanent establishment or not, they will be required to account for DST. Then VAT returns and VAT are payable. So you'll file your returns by the 20th of the following month. I think I mentioned that. And VAT payable by the same period. So what are some of the key considerations applicable to DST services? So DST is applicable to digital services provided in a digital marketplace platform by digital service providers and digital marketplace providers. So the digital marketplace providers will be providing the platform that maybe a digital service provider will come and either put their content or their ebooks, and people are able to buy and to pay for it. DST does not apply to those selling goods via digital or social media platforms. I know in our population, most people, large percentage of people are saying that when you are selling goods or services, then DST will apply. It will only apply to services. And that goes by the name digital service tax. So it's, however, we need also to look at when we say service, am I creating an enabling environment as an influencer so that goods of company X? We are given an example of then we can use the Monte. we are given an example. We as an influencer, you place their products, maybe you place it, or your photos are taken, you use products, and people are able to buy. You are paid a commission for that service. Different. Your business is not to sell those goods, but to create an enabling environment or create a need where people now would want to consume since the product is associated with you. Or one can deregister if they cease providing the digital services in Kenya. So if you've been providing services in Kenya and you decide you want to change your line of business, you can always deregister. And this is done by an application to the commissioner who will keep records for more period, since the revenue authority can ask for records for more than 5 years where they suspect there is fraud. Yeah, but normally most of the legislation from the Companies Act to Tax Procedures Act provide for 5 years. So how can we partner with you? Either through tax advisory for your business, where we look at your business, what are you trading in, what contracts have you signed, what do they mean in terms of tax? Then basic compliance. How do we go about you ensuring you are compliant with the various taxes? And then filing of DST. So we should remember that if you are a resident company, if you have DST, if you are providing digital services, then you'll be the commission that you get or fees will be subject to DST. But that will not be your final tax in Kenya, because you'll also be required to make a self-assessment and declare your income tax, where it will be reduced by the DST as we outlined in our case study. Then also filing of DST and VAT returns. So I think that comes to the end of our session. I know I've rushed a bit, but I'm happy to answer any questions that you may have at this point.
All right. Thank you so much, Eric. That is such a informative session. Obviously, a lot of information that we didn't know. All incomes earned or accrued through a digital market will be subject to digital service tax, not services tax. Thanks for that clarification. Then this will constitute 1.5% of gross transaction value. And you've had the sectors or the incidents or services that are exempt. So we have some questions, and thank you very much for those who posted the question. We have Doreen Katwa is asking, are digital marketing initiatives supported by grants exempt from DST? I'll say all the questions and then you can respond to them. Then we have Anonymous. Okay. Please give another example of exemptions. That is income tax versus digital tax. And somebody else asking, would the DST apply to apps provided for data analysis, such as WorkPay or QuickBooks? The user pays to access the platform, but for internal use. Muirore asks, Archer Digital, which you may know, provides digital marketing services. Is it accurate to assume that we are liable to pay DST? I want to add my question there. Are churches exempt or expected to pay the DST? Eric, over to you.
Okay, thank you for these very good questions. I'll start with Doreen Katwa's question. So Doreen, we'll be looking at if you're undertaking a digital marketing initiative, what I need to understand is that are people paying for that service? If people are paying for that service, or the grant is what is used to pay for that service, then we'll be looking at what kind of services are they, and Sorry, you can see me? My internet is saying, hello, Wangeshi?
I can do.
Okay, sorry, I thought I'd lost you a bit. So such initiatives will be looking at how, because I know like for grants unless the company has an exemption, normally you'll be required to account for income tax. So I think looking at, and I'll need to understand these initiatives properly, but from the top of my understanding of the question, I would say that they'll be subject to DST. However, my disclaimer would be I would need to at least get the facts. So if you don't mind, Doreen, we can always reach out to us and we discuss this more. We have the relevant facts so that we're able to advise accordingly. Then in terms of giving another example of exemptions, I've given the example of if a service, let's say we pick, I'll use one of the people I know who's been big on digital or as an influencer. Let's pick Jalango. When Jalango is called by, there's a tomato sauce is always advertising or putting on his table. If that company pays him and they withhold tax, then that income from that company, he would not be service tax. However, on his YouTube platform, if YouTube pays him for the number of traffic that he is able to get, then on income, it will be subject to DST. And I think I gave that example. Then we have a question anonymous. Would DST apply to apps provided for data analysis? So if these companies are selling their, let's say QuickBook is selling their services in Kenya, which we subscribe to, like for instance, as to Quantum, we have clients that we provide bookkeeping services. Usually some prefer we use online QuickBooks. So we subscribe on their behalf using our business card. So in such a case, QuickBooks would be required to pay DST on the subscriptions since they are non-residents, and if they are the Kenyan representative, that would be the person who would be followed up. But I don't know how KRA intends to apply this, unless we are, because we also don't have the aspect of people being appointed as agents, like in the form of VAT, where we have VAT agents where they'll be required to withhold VAT and remit on behalf of maybe certain organizations. So for DST, that's an area that is not very clear. But maybe to just reiterate, in this particular case, then the providers of QuickBooks would be the ones required to account for DST for any subscriptions done in Kenya for that service. Then we have Mwiruri, Acha Digital, yes, which I know, provides digital marketing service. Is it accurate to assume that they are liable for DST? Yes, we say any digital services provided in a digital marketplace or via a platform, then you'll be required to account for DST. But we can always have this discussion further. Wangeshi, your question on churches, I think it just goes back to looking at where does DST become applicable? Are they providing a digital service in a digital marketplace or using a platform that brings buyers and sellers? So if the church is selling maybe ebooks and they buy it, then they'll be required to account for DST. I think we outlined the areas where that would be accountable. Then there's another question here by Anonymous. I'll read it. This is my scenario. Our company works on project basis. We tend to pay employees between 50 to 70 of the total revenue on a project, and we tend to. So in our case, will the DST apply on our commission or the TOT revenue, or we pay our employees? We are digital marketing company. So we build websites, create digital content, digital marketing consultations. So in terms of digital marketing consultations, I'll start with that. This is via maybe people calling or people are able to, or via digital platform. Then in that particular case, then you'll be required to account for DST. So you build websites, and website, I think it has been outlined as around web, because when you are building a website, it's more of a project. So tend to look at most of these items selectively to determine what would be applicable. So what we need to take out is that if the service is a digital service and it's consumed via digital platform, then DST will apply. And to come back to your scenario where it comes into play, DST will still be based on if a service, let's say digital content is applicable to DST and you charge $1 million, DST will $1 million. It does not matter how you share with the employees or how the project is shared. People you've engaged, either consultants or contractors. So that one would be, DST would be payable at the gross value of the 1 million. Then the 70% or 50% you share, which becomes your cost, that will be now you'll be deducting at the end of the year. Here, DST is just an advanced tax, but you'll be required to prepare your returns and file them and deduct the DST. However, I'll be very careful, especially, and this is unrelated, I would advise you to also look at what your impressions, how you engage your employees in terms of either consultant or employees, whether they fall under that category, to avoid you being in a scenario where you're exposed in terms of other taxes like pay as you earn or withholding tax. So the other question, I don't know why people are being anonymous. What is asked here will not be used against you. Let me put that disclaimer. These are for discussion purposes. So the other question is for a very simplified approach. If I'm selling baked goods from a home kitchen on social media platforms, am I able to pay DST? So let me answer that first. So DST is based on services, not goods. So if you are baking your goods and you post them on social media and people buy, then DST will not be applicable. But if you use an influencer to maybe position or have pictures or talk about your products and people buy and you pay them a fee, then they to account for DST. If I have a YouTube channel that's not particularly selling anything, but I get income based on the traffic, am I still subject to DST? Yes, if you have a YouTube channel, then it means that there's content that brings people to that page. Obviously, maybe the content could be you on holiday or you on a video you baking your goods, and people are interested in watching such things, and YouTube pays you, then that income you get for the traffic will be subject to DST. And please, will only be a tax if you are non-resident and you do not have a permanent establishment in Kenya. But if you are a Kenyan resident, you'll be required to account for DST, which will be an advanced tax. And then at the end of the year, come up with your corporation tax. Unless there's any other question, I think I've covered most of the questions.
Okay, yes, Eric, thank you
so
so
much.
much.
If I go on the chat, there's a question on whether the slides will be shared. Yes.
Yeah. The participants are asking.
Okay, there's let me just address one. Sorry, so in terms of the material, that one we'll agree how we'll post it. So if you've shared your emails, we'll write to you and maybe direct you on where we'll post this information. We have no problem sharing. However, as a disclaimer, this is usually for discussion purposes and should not be used as advice, but I would recommend you or tell you to go back to your tax expert to advise you on your particular situation, because tax will look at the facts of each situation. And maybe just there's someone saying that they're a bit confused on the question of QuickBooks. So I said QuickBooks, if they are registered in Kenya, then they'll be required to account for DST based on the fees that they get or the subscriptions that we pay, so that we use their online platform for accounting. So we are using the QuickBooks app, then DST will be applicable, but not the person purchasing, but the person selling. So QuickBooks, unless you are an appointed agent in Kenya and your business is to sell QuickBooks app to other people, then the fee that you get or commission you get from QuickBooks, you'll have to disclose that in terms of DST. Irene has another question. Maybe I can take one last one. So feel free to get to us of our social media platforms, and maybe if you can't follow us, we always post whenever we have such discussions.
Irene, please post your question there. You'll have a space for one more question. So
okay, she posted.
Yeah.
How about, Irene asks, how about income tax on those baked goods being advertised on social media? So from an income tax point of view, so the sales you make for the baked goods will be your revenue. Then any cost that you incur, maybe sponsoring the page or where you've posted those goods, and that becomes your what we call the expenses. So you'd have the sales, you deduct expenses, then what is left is what is subject to income tax. So you continue to say whatever monies I earn from sales, yeah, that's now what I've explained, will be your income. And if you are not registered in KRA, I would request that you register, because our tax system requires you to do a self-assessment where you report the income you've earned and pay the relevant taxes. So don't be caught out where you've been earning income and you're not paying any taxes. But if you need our help, you can always reach out to us. I think we'll finish there.
Yes. I want to say that TrueQuantum is available to answer your questions. They are giving you an opportunity for attending the event. They give you a first free consulting. So if you need to ask a question or you need help, just for them to have a health check, tax health check on you, please do not hesitate to post your email address there and they will contact you. Post on the chat. We have officially come to the end of this webinar. We will send you the recording on emails that you registered with. Please, if you need a session, don't walk alone. Don't get caught. TrueQuantum is here to help your accounts, just to a dipstick health check. I can see Darlene has put her, Darlene Kinyanjui has put an email there. Please, TrueQuantum staff, take note of that email and get back to that client. Yeah, so don't be alone as an SME, don't get caught, don't get stranded with your tax. There's help available and we are here for you. So thank you very much. I would like to appreciate the platform for this webinar. Has organized by Sandbox, and they are an SME support organization that has over 25 experts under one roof. If you have other services that you need from the Sandbox, feel free to contact the Sandbox and they'll be able to give you the or direct you to the right consultant. Brandspark PR also is the organizing team. Thank you very much, Christina, Sonia, Mary Gitari, and Paul, for the behind the scenes support that you provided in organizing this event. They are a PR expert at the Sandbox. If you need PR services, you are welcome to contact them. You can put your contact there, Brandspark. But that is all. We will stay here for about 5-10 minutes in case you need to have a chat with Eric or the TrueQuantum staff who are represented here. So, but that is all for today. We thank you so much for joining us, and we appreciate your presence. Please look out for our social media pages, and you can go to Facebook also to review this event, and you'll be able to hear the fine details. As Eric has promised, we will send some information pack, whether that's the slides or a handout that we'll prepare and send to you. We'll be able to do that. So thank you very much. I have been your host, Wangeshi Kanyeki, and again, I'm very grateful to have, it was a great honor to be your host and moderator today. Thank you. Eric, do you have closing remarks?
Just thank you. Thank you for your participation and very interesting questions. And just to encourage you that tax is not very complicated. You just need to be in the right hands to get the right answers. And that's what we do for a living, where you are not. We always give you a priority before we can respond. And thank you, and have a blessed afternoon. Thank you.